listen to me, because what I am about to tell you could save you thousands upon thousands of dollars in retirement. You reach age 62, and you think, finally, I made it. I can claim my Social Security, turn off the alarm clock, and live my life. But then tax season rolls around, and suddenly you get a shock that leaves you staring at the paper saying, wait a minute. Why do I owe the IRS money on my Social Security? I hear this fear every single day. People are terrified that the government is going to drain the very money they worked 40 years to save. They ask me, Susie, is Social Security really taxed? Can I work part-time after 62 without getting destroyed by taxes? How do I keep the IRS out of my pocket? Here is the cold, hard truth: up to 85% of your Social Security benefits can be subject to federal income tax if you do not plan this correctly. 85%. That is not a small glitch, that is a massive tax trap that catches millions of retirees completely off guard. So why does this happen? The IRS uses a formula called combined income, or provisional income. They take your adjusted gross income, add any non-taxable interest, and then add 50% of your Social Security benefit. If that combined number is more than $25,000 for an individual, or $32,000 for a married couple filing jointly, congratulations, you just triggered taxes on your benefits. Think about how low those thresholds are. Those numbers have not been adjusted for inflation in decades. If you pull money out of your traditional 401k or traditional IRA to pay your bills, every dollar you take out counts as taxable income, pushing your combined income straight over those limits and taxing your Social Security. It gets even worse if you decide to take Social Security at age 62 while still working a job. If you earn over the annual earnings limit before reaching your full retirement age, the Social Security Administration will withhold $1 of your benefits for every $2 you earn over that limit. You get hit on the earnings test, and then the income you earned forces the remaining Social Security benefits to be taxed at your regular income tax rate. That is double jeopardy for your hard-earned money. Can you afford to give away 20 or 30% of your retirement income just because nobody taught you how the system works? No, you cannot. You work too hard for this money to let poor planning destroy your peace of mind. Here's what you need to do right now to take control of your financial future. First, look at where your retirement income is actually coming from before you claim at age 62. If all your savings are sitting in pre-tax traditional 401ks and traditional IRAs, you have a tax time bomb waiting to explode. You need tax diversity. Second, start utilizing Roth accounts. Qualified distributions from a Roth IRA or Roth 401k do not count toward your combined income for Social Security taxation. If you pull $10,000 out of a Roth IRA to buy a car or take a vacation, the IRS sees $0 of taxable income, keeping your Social Security safely under the tax threshold. Third, if you are between age 62 and your full retirement age, consider delaying your Social Security claim if you are still working or if you can live off taxable brokerage accounts or Roth funds first. Every year you wait between age 62 and age 70, your benefit grows by roughly 8% guaranteed. Not only does your benefit grow, but you also avoid the early earnings penalty completely if you are working. Fourth, manage your income sources strategically year by year. Instead of pulling blindly from one account, blend your withdrawals. Take a portion from a traditional account up to the top of your standard deduction or lowest tax bracket, and supplement the rest from your Roth or cash savings. This keeps your reported adjusted gross income low and protects your Social Security from being taxed at that brutal 85% mark. Knowledge is power, but action is wealth. Stop guessing with your retirement. Sit down with a qualified tax advisor or financial professional, map out your combined income, and protect the money you spent a lifetime earning. You deserve a secure, tax-smart retirement, so stand up, take charge, and own your financial freedom today.